Bryce asks a great question here. Any tips for a trader looking to make their overall process simpler? Maybe, maybe I'll do a blog post on this after this conversation too. I like that question. Um, because it comes from a place that I think is really important. It's important to strike the balance in terms of process, in terms of the way you run your trading edge business, especially when we're going to talk about like trading process, right? In terms of here's the analysis, here's what it means, here's what I should do. That's real nitty gritty trading process. And it's the first place we start off with advanced group mentoring. By the way, we still have 2 slots open for advanced group mentoring, guys. So hop in there if that's something you're interested in doing. Um, let me know if you need to work something out and figure out how to get in there, and we'll work with you. But the first thing we do there is you're going to have to start off with process. What's your process? Let's see them. Smoke them if you got them. And we could start by looking at your trader view and looking at your stats or different things, but I think that would be futile if we don't build it from a place of you understanding, most importantly, and me also understanding what's your process, what's your playbook, what's your time frames, what are you really looking to do in terms of trading process. How do you manage winners? Do you segment how you manage them like I do, depending on context? What kind of narrative we're dealing with here? How do you move stops once trades start to work? All that stuff, it needs to be understood at the get-go, and then we can build from something tangible. And that's what we do in advanced group mentoring in a big way. And then we focus on the skills to get you to mastery in terms of executing what you're supposed to and all that good stuff. So a trader looking to simplify overall process, it you know there it's not as most things are in trading. Anyone who just puts out a blanket tweet, blah blah blah, even myself at times, sometimes those can be worthless. They could be just what trader A needed to hear, but the opposite of what trader B needed to hear. And the sad part about it is a lot of times trader A and trader B both think it's good advice for them. It's tough. I mean, it's not their fault. It's just tough to know what to do and what's right when it comes to trading and adjustments and tweaking and accepting advice and all that stuff. My goodness, what a tough gig. But hey, we love the game. We're here. I do think you guys can learn some good stuff from Apteros and what we're doing here. So just the very first thing, and I'll shut up about the very first thing here, is just know that simplification may or may not be the answer for you. We must strike a balance between clarity, robustness, being objective about the things that we need to be objective about, and getting good enough processes in place to where we're not actually running around in the dark, without a flashlight trying to, whatever, insert good analogy that I don't have. Okay. So it's important that you're complicated enough, but as simple as possible. And this is a bit of a different conversation than when I talk about first do the simple, then do the simple well, then simply be the best at doing the simple. What that is talking about is quit trying to be advanced until you have the right to do so. It means progress incrementally. It means what it says. First, do the simple, which signifies that there is something after that, right? So get the simple down first. And that's what we're going to do in this live NADRO course as well. So now maybe I can begin to answer your question with all that groundwork. Um, Things that you can do. You can look at your charts and you can truly label them with job descriptions and what purpose they serve, and look at how, if you've got XYZ chart in the top right corner, go to your process documentation and find where you have written process for how you use that chart. And if it doesn't exist, you got a problem. You probably have some room for simplification. That chart can probably go. That, or either you had a glaring hole in your overall process documentation. So look for things that grab your attention. Look for things that are drawing energy from you and attention from you. And if they're not the ultimate most important things for you doing what you need to do well and executing as flawlessly as possible and not forgetting your hypos and narrative and all the stuff that we want to do, get rid of it, change your layout, make it smaller, make something else bigger, change your colors, blah, blah, blah. Emphasize what you need to with your layout and what's on your screens in front of you. Very, very important. Look for things within your process that are, what's the fancy word for repetitive or unnecessary, because they're essentially repetitive. They're giving you the same bits of information, just in what seems like different ways, but it's actually the same thing. Make sure that you don't have things that do that. Make sure you're using truly different pieces of information, as Mauricio says, that aren't redundant. That's important in terms of simplifying. Hi, Merritt. Do you have any advice on what to look for when stalking return pullbacks towards developing daily value for continuation play? At the beginning of the week, Tuesday, I was trying to play for continuation away from daily value and bear zone around 42.60. Sellers were not showing up on the tape. It was a confluent area, but eventually it ended up being a losing trade. Any advice on what to look for in that type of situation? Let's see here. Tuesday, continuation play away from daily value. We're talking crude oil here. So let's go to Tuesday. Obviously, these levels here will not be the same as they were on that day. So maybe, I can bring over my prep from that day. So here's what I had. 42.60, that neutral level there, line in the sand. And it's kind of like, one of those days. If we can hold above that, maintain momentum higher, we got some upside targets. If we don't, we revert back to 41.30, which is all the way down here. Downside scenario, great pullback, retest of 42.60. Oh, that's the recap. Sorry. So that's what we had said, and that's essentially what happened, the downside scenario. Sellers were not showing up on the tape. It was a confluent area, but eventually ended up being a losing trade. Any advice on what to look for? I'm just, if you can't tell, I'm having a hard time with this question. So I'll just tell you what I can. we still kind of have the 4260 level marked here in terms of even today's levels. So, initially we're holding above this level. So there's nothing to do. I don't care what the tape says. There's no short opportunities here early on. Where the opportunity does come is when the market shows us what's happening. The market shows us that we can break down a level. So that's I think is important. And then the way I like to typically trade is to look for some form of a pullback, loose frameworks intraday with developing value, things like that to help with honing in on trade location. But structurally, which is what we give folks in the daily market insight, we know the risk reward landscape. We know that if we're holding below 4260, that at the time put targets into this kind of green area here. We didn't have this level for us to get there, and we got within a few cents of that and kind of bounced into the close. So once I do know what you mean, that once this broke down, I go over here to my charts. This breakdown did not occur on substantial, highly aggressive, rip your face off selling, right? So what I teach my students is, depending on the clarity you have, depending on the strength of the narrative, that is an inverse relationship. An inverse relationship with how much we tend to weight and use order flow. So if our narrative, it's like on a little, I typically draw a playground, what's it called? A seesaw, right? So if this side being, all things narrative, and this side being all things order flow, well, if your narrative is strong and high, well, then the hierarchy, the importance of order flow goes down. If you don't have much of a narrative, right? Let's draw another example on the same axis here. If you don't have much of a narrative, well, then guess what? I'm going to require order flow to really be at my back and tell me short term, you can do this because you don't have much of a narrative behind it. So in this case, I think we had clarity on the session. I think we had a confluent spot that made sense to trade from. We get a shift in the acceptance picture, and we can go with that trade despite order flow not yelling at us, this is great, this is awesome, this is exactly what's happening. Order flow was lackluster, on RTH. It was barely. Here's another point, right? We talk about order flow and its usefulness and whatnot. If order flow is going sideways, its usefulness gets degraded. Now, there's different ways to interpret what I just said. But over long periods of time, if delta is going sideways and there's really just not much aggressiveness from anybody and there's not much going on, the things that we can then interpret from it, I think, go down in importance. And I think that's important. So if you look at the entire pit session on the 11th that day, I mean, delta was barely at its lowest point here. Was it like 500-600? And then at its highest point, up to this point here, or where we were pre-market, was like 400 or 500. That is nothing, right? Nothing at all. This thing can get beyond 10,000, right? In an active, aggressive market. So very, very flat. And I think that's a very, very strong takeaway for this question and this point. Thanks, Tomas. Who taught you market profile and futures trading is the second question. So we kind of covered that. Market profile would be Don Jones, Dalton, Markets in Profile, all those classic books that everyone reads, including the little whatever it was, the Chicago Board of Trade PDF. You start with that dry bit of reading there. Um, and who taught me futures trading? I mean, no one in particular taught me futures trading. I got into futures specifically because I was trading Forex quite well and wanted to start my own fund. And, Forex is you know, I guess it's more on the up and up these days. Maybe. I don't really think so. But it was certainly a black market, in 2007, 2008 when I was making these decisions. And I said, oh, I can trade currencies, but on a regulated exchange with a clearing firm and whatnot. Great. I'm going to go do that there. So that's how I got over to futures in particular. And then all of a sudden I saw all the many benefits of trading futures and never went back to anything else. Found crude oil, which was a big love of mine for a long time. The S&P, all that good stuff.